Good morning. Welcome to Goodwill Commodities. In this video presentation, we will see how we can trade in MCX crude oil today. Before looking at that, let us see what happened in the last 3 days. Since we are moving to the next contract, since the previous contract expired, now we should look into the price action of this new contract. So the support and resistance may vary. So as a follower of our presentation, we always consider the last 3 days price action into major consideration. Now we are going to see what happened in the last 3 days in this new contract. Then we can come to a conclusion what we can do today. So all the open and close were marked with an orange color box. If you see what happened on June 16th in this contract, so 3900, you can see the price around 3900 price opened, came down till 3880, then closed near the same zone. So opening and closing both are same. It looked more or less like a flat market on June 16th. The next day the price created a new high where it took the clear resistance around 3980, then it came down to create a new low, closed lower. So the next day, that was on June 17th, the price closed lower after creating a new high and a new low. So it is a confused type of price closing. Yesterday the price opened and you could see the price came down, but again took some support, then went and hit 3920, which acted as a resistance on June 16th. You could see on June 16th this 3920 acted as a resistance. So that acted as a resistance and pushed the price down till 3860, and then you could see the price climbed and closed around 3900. So this was the last 3 days price action. If we sum up all the opening and closing, yesterday we got a price closing which is equal to the June 16th. You could see June 16th where the price closed. What happened on the next day? After the price closing, the price opened near the same zone. So we are going to witness the same type of price action here. We are going to see a price opening near the yesterday's price closing. This is just a 7-minute candlestick chart. Just I had decreased the scale so that we will get some clarity. So if the price can break like what happened on June 17th, then it is a breakout to push the price towards the next resistance. If the price can break this resistance, it is going to be a confirmation on a solid uptrend. So since this is a new contract, we need to think a bit in long term also, even though we are doing day trading. But if there is a failure to break 3920, it will result in the price to come down. So it is going to be the first day in this new contract is going to come up with a challenge. It is not going to be an easy day for crude oil traders. So what we can do is you can go short in in crude market by having 3920 as a resistance. You can place your stop loss here. There are too many options available for traders. One is selling on market by having a resistance around 3920, placing a stop loss above that. Once the price breaks this zone, you can reverse your position and move your stop loss below these two support zones based on the available fund you have in your trading account. A stop loss below 3880 or 3860. So you can test both the markets, or else what you can do is you can go for buying initially by placing a stop loss below 3860. Once the price breaks this zone, you can reverse your position and shift your stop loss above 3920. We know that this is going to be, we need to hit on both the ways because the trend is not clear. So you can understand the last 3 days price action, but it is worth betting on this or trying this particular zone. You can expect a huge profit right from the price opening itself. So we will see how the price is moving during the trading session. And thanks a lot for watching our videos. Happy trading. Take care. Bye.